Okay, so we all hear about AI constantly, right? It's everywhere. But here's the real question. How do you actually invest in it? I mean, beyond just buying shares in the usual giant tech companies. Well, we're about to dive into a company that's been playing the AI game for a whopping 25 years, and it's just about to hit the public market. Yeah, this isn't some futuristic movie plot. The AI revolution is well and truly here. It's fundamentally changing, rewriting the rules for basically every industry you can think of. Seriously, from how you shop online to how your bank manages its money, this tech is the engine of change, and the train has already left the station. So that's the big question, isn't it? How do you, as an investor, get a piece of this massive pie without just, buying the same old stocks? Well, you might want to buckle up because India's very first pure play AI company is about to go public. And trust me, their story is one you're going to want to hear. All right, let's pull back the curtain on Fractal Analytics. Now, for most of us, AI feels like this brand new thing that just exploded onto the scene, right? Well, get this. Fractal has been deep in this world for a quarter of a century, a whole 25 years. They were quietly laying the groundwork for the AI-powered world we're all just starting to get used to. Okay, so what does a 25-year-old AI company actually do? Well, in a nutshell, they solve something they call the billion-dollar decision problem. Think about it. Massive companies have to make thousands, even millions of crucial decisions every single day. And getting those decisions right, that's everything. And you don't have to take my word for it. The co-founder, Srikanth Valmakani, puts it perfectly. He says, large companies make millions of decisions every day. If you bring in data and algorithms, you can make those decisions better. See, this isn't just about keeping the lights on. It's about making every single choice, from what price to put on a product to the best way to ship it, smarter, faster, and backed by data. And this whole concept has a name. They call it decision intelligence. Here's the best way to think about it. If traditional IT services are all about, keeping the servers running and the lights on, decision intelligence is about predicting where lightning is going to strike and then telling you exactly how to catch it in a bottle. It's a massive shift from just reacting to problems to proactively shaping what happens next. Okay, decision intelligence sounds super impressive. I get it. But what does it actually look like in the real world? How does it work? Let's break it down with a super simple example so we can all see it in action. All right, so imagine you run a huge biscuit company. It's a classic problem. Your sales are suddenly dropping in smaller cities, and you have absolutely no idea why. You're basically flying blind. So Fractal comes in. They don't just give you a report. They build a custom AI tool that plugs right into all your company's data. Now you can just ask it questions. Hey, should we change the packaging? Should we cut the price? Is our distribution network the problem? The AI then crunches all the numbers, sales figures, supply chain data, customer feedback, you name it, and comes back with a data-backed recommendation. It tells you the best path forward. Boom. That's the end of guesswork. That's decision intelligence in a nutshell. So now that we know what they do, let's pop the hood and see how the business itself is built. It's actually pretty interesting, kind of like a tale of two companies all under one roof. On one side, you have Fractal.ai. This is the main engine, the core business. It's what brings in almost all the money by building those custom, tailor-made AI solutions for big companies. Then on the other side, you have Fractal Alpha. Think of this as their in-house innovation lab or incubator. This is where they build and invest in standardized AI products and new companies. So you've got the core business of today and their big bets on tomorrow. Now, have a look at where their money comes from. This is super important because it shows they're not just a tech company for other tech companies. They are deeply, deeply embedded in the real economy. We're talking consumer goods, retail, healthcare, banking. These are some of the biggest industries in the world. This kind of diversification, it's a massive strength. It means they're not overly exposed to a downturn in any single sector. Okay, if there's one number you need to remember, it's this one. 121% net revenue retention. This is the secret sauce. What does it mean? Well, think of it this way. For every $100 a client spent with Fractal last year, they spent $121 this year. That is huge. It's concrete proof that once a company starts using Fractal services, they don't just stick around, they find more ways to use them. They become essential. So, the story is compelling. The business model seems solid, but do the numbers actually back it up? Let's follow the money trail and see what their financials tell us. All right. Looking at the revenue, this is exactly the kind of trend you want to see. It's a steady, consistent climb. But look closer at that last jump. It's not just growth, it's accelerating growth.
That suggests that the demand for what they're selling is really starting to heat up. This next chart tells a classic good news, bad news story. The good news? They are absolutely dominating in the world's biggest and most lucrative market, the United States. I mean, over 65% of their revenue comes from there. The bad news, or at least the risk, is, well, they're heavily dependent on that one market. It's a high-stakes, high-reward situation for sure. So this brings us to the IPO itself. Why go public now? Well, they're looking to raise a significant amount of cash, and they're planning to plow that money right back into the business, doubling down on R&D to stay ahead, paying off some debt to strengthen the balance sheet, and funding their global expansion. This is all about pouring fuel on the fire for their next big growth phase. Okay, so let's put it all together. What's the bottom line here? Is Fractal perfectly positioned to ride this massive AI wave into the future? Or are there some serious wipeouts, some major risks that investors really need to keep an eye on?
The case for Fractal, the bull case if you will, is pretty compelling. First, they're in a market that's just exploding. It's set to nearly double by 2030. Second, their clients are incredibly sticky. They stick around for over 8 years on average. And third, they have that proven land and expand model, that 121% revenue retention, which shows they know how to grow right alongside their clients.
But you have to look at the other side of the coin. The risks are very real. They're super reliant on just their top 10 clients for more than half their revenue. That's a lot of concentration. They're also heavily dependent on the US market. And then there's the big one, the elephant in the room, the Gen AI threat. What happens when AI tools become so good and so easy to use that clients can just do this stuff themselves, in-house? That could seriously erode Fractal's entire business model.
And so that's what it all comes down to, really. It's this one massive question. Is Fractal going to be the company that writes the rules for this new era of AI services? Or is the AI revolution itself going to write them right out of the story? That right there is the billion-dollar question.